So welcome to this short video where I'm going to provide a succinct summary of the key drivers and outlook specific to the lead market, drawing particularly on the insights of analysts and industry experts as expressed during virtual LME week events that took place over the last week or so. As an overview, the lead initially tracked the broader base metals complex tons of prices pretty well this year, but it's really suffered over the last few months in terms of its relative value. It's really dropped behind the pack. And that's really a combination of factors that have driven that. I think it's the rise in secondary supply and the rebound in secondary refined supply. It's reduced support from China in terms of imports relative to other base metals. And also it's the pretty bearish net bearish fund interest in lead, which is an outlier amongst the base metals at the moment. And that reflects really a weaker underlying fundamental narrative and longer-term narrative around demand and threat of substitution from electric vehicles, and for an example. In terms of demand, the big drive this year is a rebound in replacement battery demand, which held up pretty well. Chinese automotive sector has also rebounded quite strongly. I think the main concern, and probably over into Q4 and probably into early next year, is that there was some quite strong pent-up demand over the summer as people emerge from lockdowns. They want to get the batteries placed in the cars, and also from restocking, as that was front-loaded in some regions amongst fears of further possible disruption to scrap supply chains. In terms of refined lead consumption, the anticipation is that will fall by that's fallen by around 6.5% in 2020, but will rebound probably about 4.5% in 2021. That's from the IZLSG estimates, and that's really a rebound from the low base we've seen this year, but also the ongoing rebound in the automotive sector, which will be a slow process over the next few years. Lead acid battery outlook for long term also has the substitution threat from EV. May continue to be used in EV for some non-motive functions, but also there's the substitution threat from lithium ion in industrial uses, and also electric bikes, for example, in China is another area where we could see some softness. So there's not a great narrative there in the long term from EV. On the supply side, mine supply has been disrupted a bit this year, but it's not really impacted refined supply because of stocks at smelters, so not really been a significant factor, particularly as secondary supply, responsible for about 70% of lead supply. That's been the main area where we've seen fluctuations. Obviously, very early in the pandemic, scrap supply disrupted very significantly. That's rebounded quite strongly, so that rebound in secondary supply is really weighing on the fundamentals a little bit now, but both into next year. So in terms of the market outlook, I think we're still anticipating and analysts are still expecting a surplus in the lead market next year, perhaps a bit restrained from what we've seen this year, maybe in the order of 200,000 kilotons, something like that. But I think what we're seeing is, because you've got this strong fundamental negative situation, and because you haven't got the fund influence, because the narrative isn't there in the longer term, the market is going to price a bit more on the physical fundamentals and on that surplus environment. And I think that doesn't bode well for zinc next year, particularly relative in its performance to the other base metals. So overall, that's the overall overview for lead. For more LME week insights, I encourage you to view some of our other LME week review videos that we've put out, and that includes a base metals market overview, so a bit broader, and a drill down into some of the other individual metals. If you've got any questions, then obviously feel free to contact me directly.